Hi everyone and welcome to the weekly update with me, Rich Perry, market analyst at Tech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, moving into this week, it certainly seems as though the dollar is back on the main agenda. Now, on Friday we had core CPI for the States come in slightly higher than expected, and that drove the dollar higher. Significant turnaround in expectations on the day, and it meant significant levels were broken on lots of these forex indicators. Now, what we've seen is the move sort of exacerbated by Janet Yellen's speech into the evening as well. Her speech suggesting that she remains of this opinion that the US economy is improving. The weak data in recent months is still transitory, and the Fed is concentrating on continued improvement in the labour market, and specifically also inflation as well. And coming on the back of the fact that we had that improvement in inflation, or core inflation for the States, certainly gave traders an opportunity to buy on the dollar, and certainly we had that big moves that we saw in that dollar currency. So we saw that, but also what we've seen is a little bit of caution in the equity markets, that there's still no real progress being made, it would appear, for Greece in its negotiations with its creditors, and that the next deadline of its repayments schedule on the 5th of June is coming ever closer into view. Now, that is a further 300 million euros, and certainly it would appear that without this next bailout tranche of 7.2 billion euros, there may well be some problems for the Greece. And not only that, through June there's a significant number of other repayments due as well. So it really needs to get this last tranche of the bailout money, otherwise we could be coming to a head pretty soon in this. And equity markets are getting a little bit nervous on the back of that as these dates come ever closer. So what are all these factors playing into the forex markets? Well, certainly euro dollar is the big chart that has broken down some key levels, certainly on Friday, and moving into the early part of this week as well. So the breakdown below 1065 is a big support that's been broken on euro dollar, and that now opens several key lows really. You've got 109 figure, which is around about where we're trading at the moment, and also 108 figure, which is the next key pivot level. So it looks as though the outlook has changed for the euro dollar, and now rallies are being seen as a chance to sell. So for example, I mean, you can almost equate this to the movement on the dollar index, which is the almost flip side opposite of that, whereby dollar index has now formed a base pattern, breaking higher and looking to push on. So dollar index is now retraced over half of the sell-off that it had from that mid-April to early May decline. So that's very interesting that we've seen that, and that's again a big technical level that's been taken out. So in terms of cable, where's the move seeing? Well, I don't think that sterling is as weak as the euro is certainly at the moment. I still think you're seeing some decent signs of sort of coming out of the UK economy. So in terms of sterling relative strength to the euro is fairly positive. However, versus the dollar is on the bull run at the moment, so sterling is being dragged back with that. So in terms of cable, it's testing the key support now around 154 figure, and if it breaks that, you're looking back at 52.90 and then potentially even 51 figure again. So some big levels there on cable, but certainly at the moment the momentum indicators are rolling over, and it certainly looks like that pressure is growing to the downside, and certainly looks again as though that rallies are being seen as a chance to sell. Now on Tuesday, the big breakout has come on dollar yen. After months of trading sideways, we've seen dollar yen bursting through the resistance at 122 figure. Now, if you take that as a range breakout, you could even argue there's an upside breakout target of 125.70. Now, before that, you've got to negotiate the key 2007 highs. Now, dollar yen is at an 8-year high, and the 2007 year highs were significant highs in the history of dollar yen. So they came in at 123.65. and then up at 124.15. So a couple of key levels that would need to break out. But certainly if we got a closing breakout above 122 figure, then that would look positive for the dollar yen tonight. So in terms of the equity markets, well, we've got a bit of a mixed bag recently. You've got the S&P 500, which has been drifting ever so slightly higher into new all-time high ground. Momentum indicators not all that positive though. You're still seeing a decent bit of momentum, but not conducive to breaking out into new all-time high ground. And I've been looking at a chart recently of the Dow Industrials, which is supposedly meant to be sort of confirming the S&P 500 moves, and it has done historically across the chart. But at the moment, you're seeing the Dow Industrials actually at an 8-month low versus the S&P 500, which is actually at an all-time high. So a bit of a divergence going on there, and it could mean that with obviously the S&P 500 26, 27 on the cyclically adjusted price earnings basis. So maybe it's looking a little bit expensive and a bit toppy, but we'll see, because obviously it's still just creeping into new all-time highs, but I'm still a little bit concerned about that move. Now, in terms of the DAX, well, we've seen the DAX running pretty negatively correlated with the euro recently, but will that correlation continue, that negative correlation? Because obviously now we're coming up to the potential for Greece to maybe even default on its payments. That would certainly put pressure on the euro, and it would also put pressure on the DAX. So maybe that negative correlation will begin to break down. Certainly today, for example, with this negativity that we've got today, we're seeing the DAX and the euro negative. But DAX is sort of chopping around at the moment, whereas the euro is under quite significant pressure, it would seem. FTSE 100, range bound as ever, not really going anywhere, sort of failing still to break out to the high ground, but still managing to hold on to support. So it's still just really unable to gain too much traction to the upside, but it's still holding on to support levels. So not too bad in terms of FTSE. For the gold price, well, we're seeing gold actually now beginning to come under pressure. It had held up pretty well back end of last week, but today we've seen a break below 1200, and I think that is a fairly important near-term move. It certainly within the range anyway. It certainly looks like it could well come back toward a test of the 1178 range lows now once again. So what are we looking at in terms of the economic calendar? Well, the economic calendar has been as I said, fairly well dollar orientated at the moment, and certainly we're seeing today on Tuesday we've got the consumer data, we've got the durable goods and the consumer confidence for the States, both important numbers because those data have been deteriorating in recent months, and it'll be interesting to see if they begin to pick up, if that would give the dollar another spurt to the upside. We've also got new home sales data as well. But then on to Wednesday, we've got the Bank of Canada giving monetary policy. Thursday, we've got the UK giving its second reading of GDP, not expected to change too much from the first reading there. And also we've got some pending home sales, so more housing data for the States. And then on to Friday, we've got the Japanese CPI, and then we've got also Canadian GDP, but also then the important one being the US GDP growth and the revised data for the Michigan sentiment. So quite a lot of US data once again to get our teeth into, and I think it's again going to be driving that dollar volatility through the week. So I wish you good luck in your trading, and I'll speak to you again next week. Thank you.